Tanzania, a nation with vast resources and enormous growth potential, is now facing significant economic pressure. After the October 29 demonstrations, which led to civil unrest, concerns about stability began to rise across key economic sectors. This was followed by actions from the European Parliament involving sanctions and conditional aid, creating a more sensitive and closely monitored economic environment. Analysts note shifts in investor confidence and short-term performance indicators. Today, we break it down clearly, crowdly: growth trends, inflation patterns, trade restrictions, and the impact on the ordinary citizen. Tanzania is a country with vast resources: minerals, natural gas, agricultural land, and even growing tech hubs. The nation's GDP has been growing at an average rate of 5 to 6% in recent years. This is impressive considering the challenges within the region. But this growth hasn't reached everyone. Urban populations have better access to jobs, formal employment, and essential services, while rural areas continue to struggle with limited access to basic necessities. The cost of living has increased, inflation is rising, and wages are not keeping pace with economic growth. Inequality remains a major issue. The poverty rate is still high, with more than 26% of the population living on less than $1.90 a day. So, while the GDP numbers look strong on paper, the impact on the everyday citizen is much more moderate. Now, let's talk about the European Union's trade restrictions. The EU has imposed strict standards on imported products, especially agricultural exports and minerals. This has created a significant barrier for Tanzanian exporters. For instance, vegetables heading to markets in Germany or the Netherlands must meet EU standards for hygiene, packaging, and traceability. For smallholder farmers, meeting these standards is costly and often impossible without technical support. The mining sector, particularly gold and gemstones, is also under pressure due to ethical sourcing requirements. EU buyers demand certification proving responsible sourcing. Failure to meet these conditions can lead to market closures or loss of contracts. This presents a major challenge for both the government and the private sector, but also an opportunity for better market access if compliance is improved. The domestic situation is equally critical. Youth unemployment, underdeveloped infrastructure, and a heavy tax burden on small and medium enterprises are real challenges. Small businesses struggle to access capital, loans remain expensive, and interest rates are high. Without financing, productivity stays low and business growth slows. On top of that, reliance on imports for certain essential goods makes the economy vulnerable. Exchange rate fluctuations directly affect citizens and business owners alike. Structural reforms are necessary, but they take time to implement. And in the meantime, citizens bear most of the cost. But Tanzania holds enormous potential. Natural resources, agriculture, tourism, and the tech sector are strong growth drivers. With strategic investment, proper policy execution, and expanded access to global markets, Tanzania can achieve sustainable long-term growth. Foreign direct investment in infrastructure, value addition, and SME capacity building could transform the economy. Improved trade negotiations with the EU and other global partners could open more markets and strengthen domestic production. So, even though the challenges are substantial, the opportunities are even greater. Growth, innovation, and strong partnerships have the power to improve citizens' lives and build a more resilient economy. So the Tanzania story is clear: strong macroeconomic growth, but everyday challenges that still need real solutions. Let's learn from these realities, pursue the right solutions, and ensure that every citizen has access to a better life.